3 months. That's all it took for this guy to lose almost 60% of his savings. And the worst part? He still couldn't figure out what went wrong. He was staring at his portfolio, everything in red, confidence completely gone, asking himself one simple question. Is investing really this hard, or am I just doing something wrong? The truth is, investing isn't the problem, and this guy isn't stupid. The real issue is that this guy made the same mistakes that almost every beginner makes. And if you're just getting started, there's a high chance you're making some of these too without even realizing it. It all started when this guy decided to jump in without really understanding anything. He had watched a few videos, seen people flexing profits online, and thought, I'm missing out. Without taking time to learn what stocks actually are, how markets move, or what risk even means, he opened an account and started buying random stocks that looked cheap. For a few days, things went up, and he felt like a genius. It seemed easy, almost too easy. But then the market dropped, and suddenly everything changed. He had no idea why prices were falling, no plan, no strategy. Panic kicked in, and he sold at a loss. That's when reality hit him. Investing isn't just clicking a button and hoping for the best. If you don't understand where your money is going, you're not investing, you're gambling. Then came the second mistake, and this one is even more dangerous. This guy started chasing hype. Everywhere he looked, people were talking about the next big stock or crypto that was going to the moon. Social media was full of screenshots, gains, and promises of easy money. Naturally, this guy didn't want to miss out, so he bought in, but not early. He bought at the peak when everyone else had already jumped in. And just like that, the market reversed. Prices dropped, the hype disappeared, and this guy was left holding something that nobody cared about anymore. What he didn't realize was that by the time something becomes popular online, the smart money has already made its move. He wasn't early, he was late. After taking a few losses, this guy became impatient. He didn't want slow growth anymore. He wanted to recover quickly and prove to himself that he could still win. That's when he made the third mistake, trying to get rich fast. Instead of investing steadily, he started taking bigger and riskier bets. He put a huge portion of his money into a single trade, hoping it would turn everything around. Then another risky move, and another. In his mind, one big win would fix everything. But that's not how it works. One bad trade wiped out a large chunk of his remaining money, and things started spiraling. One day, he opened his portfolio and just stared at the screen in silence. Months of savings, almost gone. That was the moment it hit him. Real wealth isn't built overnight. It's built slowly, through discipline and consistency. But this guy had been chasing shortcuts. At this point, the damage was already serious, but he still hadn't learned one of the most important lessons, risk management. This guy never thought about how much he could lose. He only thought about how much he could gain. He didn't diversify, didn't set limits, didn't manage position sizes. He would go all in on one idea, purely based on confidence. But confidence doesn't protect your money, strategy does. When the market turned against him, he had no backup plan. Small mistakes turned into massive losses because everything was concentrated in the wrong places. What he didn't understand was that even the best investors are wrong sometimes, but they survive because they manage risk. If you risk too much on one trade, one mistake can wipe you out completely. And then came the biggest mistake of all, the one that quietly destroys most beginners, letting emotions control decisions. When his investments were going up, this guy got greedy. He didn't take profits because he thought prices would keep rising forever. When things started falling, fear took over. He panic sold at the worst possible time. Over and over again, he repeated the same pattern, buying high and selling low. And the scary part is, he didn't even realize he was doing it. The market doesn't just test your knowledge, it tests your emotions. If you can't control fear and greed, they will control your money. Experienced investors stay calm. They follow a plan. They don't react to every movement. But this guy reacted to everything, and that cost him more than any single bad trade. Here's the thing though, this guy isn't just one person. This guy is almost everyone at the beginning. Every investor has been there at some point, making emotional decisions, chasing hype, ignoring risk, and trying to move too fast. The difference is that some people learn from these mistakes early, and others keep repeating them until they lose everything. Right now, you have a choice. You can either go down the same path as this guy, or you can learn from his story and avoid those mistakes before they cost you. So what should you actually do? First, take the time to learn the basics before putting serious money into the market. Understand what you're investing in and why. Second, start small. Don't rush. Focus on gaining experience instead of chasing profits. And third, stay consistent. Wealth is built over time, not through lucky trades. If you follow these 3 steps, you'll already be ahead of most beginners. Today, this guy is still in the market, but he's different now. He doesn't jump in blindly, doesn't chase every trend, and doesn't let emotions control his decisions. He learned the hard way, but you don't have to. You can learn from his mistakes without paying the same price. Because the market doesn't forgive easily. It rewards patience, discipline, and smart decisions over time. So before you make your next move, ask yourself one question. Are you thinking like this guy right now? If the answer is yes, take a step back. That pause might save you from a mistake you'll regret later. And if you don't want to become this guy, then stick around. Because in the next videos, we're not just talking about mistakes. We're breaking down real strategies step by step.